Good afternoon, everybody, and welcome to today's video briefing. Day, I don't know what it is, 45 of my personal shutdown fantasy. We're going to talk today about the earnings report season. Um, and let's just take a look at some of the few bright spots, and bright they are. We've got Johnson & Johnson here. These guys are leading in medical equipment production, as well as having a few pokers in the vaccine fire, as well as well, they have a number of different angles here. But J&J, as you can see, this is an hourly chart. Oh, I want to start using my sign. It is Vavoom. So that's moving up quite well. The other one, of course, or another one is Microsoft, though it's taken a little bit of a correction. But Microsoft, due to the enhanced workers from home using Office products, Vavoom. Um, Another one, of course, the classic, as we learned yesterday, were these guys. Um, Vavoomity voom voom. This is just these guys are making money hand over fist. They are cleaning up. They reported, I don't know, 55 million new users or something. But again, this is how I want to present the overall picture to you. They said it's probably going to come at the expense of future earnings because they're not able to produce anything. These guys produce movies constantly. Well, that's stopped. Now, this is the general approach I think we need to take to the earnings report season. Leave out, and I mentioned this yesterday, leave out the standard calculation for the earnings report trades. They're not viable now because the first half of the first quarter was probably more or less business as usual, but the second half was devastating. And nobody really cares too much about earnings at this point. What's important, and I quote here the Federal Reserve Bank of the United States, is solvency and liquidity. Nobody cares about profits, and they mention this in the context of the reflotation, the cash injections and bond buying. And don't give me share buybacks. Don't give me bonuses. Don't give me any of this, accounting hocus pocus. This is money to keep you solvent and liquid. So they're trying to, control the piggishness. Nobody wants any piggish behavior, as we saw with Shake Shack a lot, and the president himself has asked some of these corporations to give back the tens of millions of dollars they've taken in small business assistance. Um, so excluding cases like Netflix and Microsoft that are doing obviously well out of the virus, virtually every other corporation on the major indexes around the world are suffering severely. Not going to be any dividends, not going to be any buybacks, not going to be any of the standard procedure that goes along with earning reports season and the earning reports trade in particular. Rather, we have to position our clients either to learn how to sell short virtually everything in the index, if not all of the indexes outright, which is the common trade. If you follow the signals and the updates, you know that indexes are hot commodities, no pun intended. So my idea is, if you're going to talk about the earnings reports, only talk about the positive outliers. Netflix, Microsoft, Uber, Lyft. These guys are doing well out of it. But we've got to start pushing the selling and selling short because we're a derivatives house. That's what we sell. CFDs allow us to buy and sell with really high liquidity, fairly easy execution. Yes, the costs have gone up, but that's to be expected. The risks have gone up as well. But we're in this. The long-term picture for this is quite bleak. None of these corporations are going to be coming back anytime soon, and by that I mean within the next year. The recovery is going to be very slow. Some of them are not going. Many are not going to recover at all. Many are going to go bust. And there's going to be consolidation, but we're not really seeing that yet. It's too early for consolidation. The weak hands are just losing their shirt, and some of them, no doubt, applying for federal assistance just to keep the oxygen flowing, i.e., what's oxygen in this context? Solvency, liquidity, cash. Cash is king. That's why you see the sell-offs. The sell-offs are because people don't want to hold any assets. They want cash. Maybe they'll buy a gold contract, although that has not really been above 17 for more than a few minutes here and there. It's 16.50, 17. So there's no real rush to gold. Although once the inflation from this enormous stimulus package starts to hit home, you're going to see gold go above 2,000. But that's maybe later this year, early next year. So that is the earnings report season update that I want to impart. Sell the earnings report seasons as opportunities to short. Most of what we're going to be hearing, in fact, virtually, except for the banks, talking about they made, J.P. Morgan made $10 billion processing some of these small business loans. Don't get me started with that, but maybe we'll do a separate subject on the increasing political risk that is everywhere. That I think we ought to start paying attention to. This is going to that's a longer term picture. It's not the purpose of today's discussion. So, ladies and gentlemen, with this, I'll bring today's session to a close. Good luck and stay healthy. Bye bye for now.